Hi everyone, it's Rokas from Return Ventures, Life of Vilnius. Today I'm super happy because I have Rob Genieser, from managing partner at ETF Partners. Hello, Rob.
Hi, Ruckus. How are you?
I'm good. I'm good. How are you?
I'm very fine, thank you. It's great to be with you from London today.
No, perfect. Thanks a lot for joining, and I'm super happy to speak to you about your experience and also ETF Partners and your thoughts on the general market. So as usual for people that are tuning in, we're gonna be doing the standard. So we're gonna do go through questions with Rob for 40 minutes, and then we're gonna come back to questions that you guys ask. So feel free to ask these questions on the Braille platform, and we're gonna address them later. So Rob, I think it's for me it's super interesting because you had such a fabulous career for your time, right? So I always ask this question: how do people find themselves in energy tech or clean tech investments? But I want to kind of take a step back and firstly go through your career. So you worked in as someone would say, you have a perfect resume. You worked in investment bank in the time when investment bank was super interesting. I'm not saying that it wasn't now to these days. You went to work to HBS, and then you worked in New York in a venture firm through times that one of the mostly interesting times that have been in venture probably industry when it kind of picked off. So coming reflecting on like your experiences and how you got to clean tech sector. You were already an established venture capital investor. Could you briefly kind of do a step back, what happened before you kind of stepped into clean tech, and then subsequently how do you find yourself in ETF Partners and your journey since?
Sure, and this will date me, of course, but back in 1989, when I was graduating from Harvard, I decided I would go get an understanding of what it meant to work for an investment bank. So I went to work for Morgan Stanley back then, and I learned all the skills of becoming, sort of adept at understanding a balance sheet, income statement, et cetera. And so once you have that skill set behind you, I think you always feel well prepared to do whatever you want to in life. And my
Mm,
passion was working with the entrepreneur because Morgan Stanley had sent me to Asia, and I actually began my career out in Asia. And It was such an exciting, dynamic time. These were the early 90s. And I worked on everything from, I think it was actually the second Chinese IPO
wow.
to the financing of a lot of power plants out in Asia, because back then we still had blackouts and
Mm,
brownouts in places like Manila. So there was a shortage of energy back then, let alone a desire for clean energy. I went back to Harvard to, as you say, not so much fill out the resume, but really to understand a little bit more about how businesses were created and run. My goal was to go to private equity in Asia back then, back in '95. And I stopped off in San Francisco on the way, and I fell in love with tech and fell in love with Silicon Valley. So I spent a good career out in Silicon Valley as an investor working for Hamrick and Quist. And H&Q was a fantastic firm. I mean, this was a time when Silicon Valley was really taking off. I like to say it was when Netscape went public, and I think
mm.
most people on the call don't even remember Netscape, but it was one of the early browsers back in its day. And within that time, we had Yahoo, and then within that time, we had Google. And it reminds us how quickly the world can change and how quickly technology can march on. And in that early part of my career, I spent a lot of time investing and working in the communications sector, communications technology sector, because it may be hard to believe for those on the phone, but when I started in Asia, we didn't have mobile phones. When we were working, we had our pagers, to put it in perspective. And that whole revolution, really took place over the course of a 3 to 5 year period, that
Yeah.
mobile phones started to become prevalent. But I think with a good grounding in technology, good grounding in investing, good grounding in Silicon Valley, where at the time that was the place to be. Now I'd argue that you can do it in lots of different places. I came to Europe because I went partly for the adventure, and partly because Europe was emerging as a very interesting place to do tech investing.
Yeah.
And I've been here over the last 20 years. I've had a great fortune to work with Singapore through much of that. The Singaporeans were big believers and investors in technology, actually all the way back into the 80s, I believe. And they always wanted to support and invest in young technology companies, partly bring that technology back to Singapore to help Singapore be successful, and partly because they thought it was a great investment area. So I had the fortune of working with them for a number of years before we set up ETF. to do sustainable investing.
Wow. Yes, quite a career said. You saw it all from like the early days on, and kind of tuning into this question, I think this is something that I cannot actually ask a lot of investors because you've kind of rode the whole wave. And back in the days, if you remember, so Cleantech 1.0, you were probably a generalist at the time, right? Do you know how does this kind of shape through time through your career? How do you see like
Well,
energy sector change completely now to this date, especially?
so Ruckus, share with you two stories. I love the way you said wave, right? Because that's what it has been. When I started in Silicon Valley back in '95, the PC obviously was becoming more prevalent,
Mm-hmm.
and we had a software wave, if you would, enterprise software wave, where people were starting to build technologies around it. Then, of course, we had the internet wave. Then we had the social media wave. And communications wave, which I was a part of. And I think our decision to start ETF, the Environmental Technologies Fund, was very much a belief that the environmental wave would be equally big, okay, and equally
Mm-hmm.
important. I like to think that we were early in wanting to do things about climate change and do things about pollution. But also from a commercial point of view, there was a belief that society would demand change,
Yeah.
demand that we do things for the better, and that more and more entrepreneurs would seek to build businesses there. So when ETF, I think, was first conceptualized back in 2006, first investments made in 2007, there was a fundamental belief that these companies would be successful and be part of a larger wave.
Mm-hmm. No, it's fascinating. I think you're one of the first firms, right? I still don't count them in hundreds here in Europe or even US that would be focused, right? So this is clearly it's amazing, to have specialized investors, and I believe in, that's what drives change. And even only now, back forward to from 2016, as you mentioned, to 2000 probably 18 is when the conversation just started about generalists started to look in this space. So I'll definitely come back to these themes specifically later in our discussion. So going from your personal sort of background, I think that's very helpful for people that are watching to understand, yeah, and it's very important in this context. And so you mentioned ETF Partners. So you started in 2006. Could you tell a bit more about ETF Partners, about the firm and where you guys focus, stage, which fund you're currently investing off, and total assets under management?
Sure. We're investing our third fund. We have over 400 million euros under management that we're investing into entrepreneurs across Europe. So we focus exclusively on Europe. We say there's always three pillars to our strategy. We're very interested in how industry is changing, how life in the city is changing. And I think it's changed quite a bit in the last 3 months, actually.
Mm-hmm.
And then finally, how the energy sector is changing. And energy, of course, cuts across the other two verticals. So, energy doesn't sit by itself. I think that more and more people are focused on not just their energy needs, their usage, their carbon footprint, et cetera. But again, it is part of the conversation when you look at your life and city, your life in industry.
So when you founded like ETF Partners, how big is the firm? How many investment professionals you have, and how many partners when you initially founded the firm?
So you can correct me, those that actually read the website, but I believe about 15 of us today. And again, at the partnership level, we have 5 partners. We're very cognizant of the fact that we need to have people from all over Europe, different backgrounds. So, we have Germans, we have people from the Nordics, French,
Mm,
from UK, et cetera. And I think to be a successful pan-European investor, you have to have people with different cultures and backgrounds as part of your team. I think one of the most important things we can do as the senior leaders of the firm is also ensure that we create a great culture within our own organization. And it's a wonderful place to be. I mean,
mm,
people are driven to make a difference, and also generate commercial success and have a lot of fun doing it, right?
yeah,
And I think
always important.
with a venture capital fund, you have to remember that you need anywhere from 10 to 15 years to demonstrate a return in most cases across a fund's life. So that means that the team that you work with, you have to both like and respect because you're with them for a long period.
Absolutely. The feedback loop is definitely a long one.
Absolutely.
So, I think, when from both, I think this question addresses both yourself and maybe ETF partners from that process? How do you pick investments? What's the most important thing for you in the company when you look at it, assessing it, and maybe putting in a twist of broader as a firm, what you look in entrepreneurs? Because I know everyone has, aside from things, everyone is building their own uh, sort of thesis of how they approach and look at teams and companies, and you evolve through that through your successes and mistakes as you develop as an investor. So would like to probably start first with yours personally, given that you have, probably have a very, very long, career in that.
Yeah, I think it's fortunate that where I am in my career, having been an investor for over 25 years in tech, it's very easy to do our jobs in a simple fashion. Okay, what
Mm,
is a simple fashion? That means hopefully finding good partners that you want to work with. And I'm thinking now specifically of the entrepreneur because I view the entrepreneur as a partner along the journey. Because we don't own companies, we're just investors in
yeah.
companies, right? We own a minority position always. So we have to really believe in the founder who's running the company and either his or her ability to generate success. And we also have to believe that we're on the same timeline, that we have the same aspirations in terms of how we see success, how we want to grow the businesses. And we also have to be on the same page with how we're going to deal with difficulties along the way, because there are always challenges in
Mm,
every startup that we're in. So I think picking the right people is the most important thing that we do. I also think that's true if you're an entrepreneur, that you should pick the people
yeah.
you really want to have as your shareholders and your supporters, because the joke used to be in the 90s, you can never fire a shareholder. And so, I think this concept of partnership is really key in making sure you're on the same page with the people that you're working with. Some other people in my team are probably more enamored with technology, understanding what is the innovation, what is the competitive advantage that the technology will bring. Others, I think, focus on things like, okay, what's the need we're solving, and will somebody pay for that? These are all good questions to ask, but I suspect if you were to ask my team, they would say Rob was a people person first, and
Yeah.
good people make great companies.
Mm, can't agree more. Um, uh, I think going into a bit your portfolio and from ETF partners and maybe companies that you work directly with, what's the most? I think I always ask this and address to one company, but it's a tough one to answer because it's hard to pick one because you're probably excited about all the companies. But what's the most exciting company that you maybe invested or exited even? Or you currently are invested, or maybe if you don't want to pick a company, what's the most exciting space or technology specifically that you currently have in the portfolio?
Well, it's fun to actually track a company's journey and see whether you added some value along the way, right?
Mm,
That's what I like. And again, in partnership with the entrepreneur. So, one of the ones that I'm enjoying right now is our company Flyability, just because I think it's so cool and so easy to explain.
mm,
They have a drone that is encased by a carbon shell. What that means is that when you fly it into a person, you don't damage the person. You
okay.
fly it into the wall behind you, you don't damage that wall or that drone, right?
Mm,
And so it's what we call collision tolerant. So if you're doing in close inspections, maybe of a boiler or a sewer pipe or what have you, you can use this drone to collect a lot of data information.
okay.
And it's a lot better than sending people into harm's way. It's a lot cheaper, it's a lot quicker, and a lot of people in the energy industry are now using it to inspect their critical infrastructure. But to specifically to your story is that, how did we find that company? Well, being a Harvard graduate, I was really excited by reading about the robotics lab at Harvard.
Mm,
And they were teaching these drones to fly like insects, where if you hit the wall, the drone would survive because the insect survives. So that's how I discovered the company. My colleague Remy, his son was attending a university, I think UPFL in Lausanne, and knew the founders, right? So
nice.
we came at the opportunity from different directions. Remy was really able to validate these are fantastic guys. And I was like, wow, this is really cool, right? Because
Mm,
we kind of get the basic principles of what they're trying to achieve. And they had won a Drones for Good program in the UAE, which is where Rokos, you and I first met.
Yeah.
And they were on their way with early customers. So the question is, could we take something that was quite young in terms of the company and grow it to be very successful? And these guys have gone from very little revenue to into the double digits, millions within 3 years, right? And now the really interesting question is all this data that you're starting to collect. That becomes more and more important to people that would like to process it or host it or use it in some capacities to understand what's going on in either your mine or in your utility, your ship, etc. And I think it's part of the wave as we go towards, if you would, industrial technologies that people are very interested in today.
Okay. No, that's definitely a very nice story and very impressive company. Coming to that as well, actually, something that I forgot to ask you. Do you guys focus mostly on software companies, or you both invest in hardware and software companies, or maybe only hardware-enabled software companies? How would you describe, I think some people sometimes, get fuzzy if, VC funds are kind of being a bit on the sidelines to invest in pure hardware companies. What's your kind of take on that from ETF perspective?
Yeah, so I've been, as you mentioned, beginning around for a while, right? I try not to make that distinction between hardware and software because I'm the first to realize you got to bring your software to the battlefield.
Yeah.
It's sort of like the Trojan horse, right? If you have no way of getting your army inside the walls, what use is having your army? And so I think that sometimes as a means to an end in an emerging market, right? For example, the drone industry. You have to have competence in hardware in order to get your software solutions in. So I don't think I would really make the distinction between hardware and software as much as what's the solution. I do believe that a lot of people's focus on recurring revenues is legitimate. I don't always know why people pay such high multiples for those
Yeah.
revenue companies. But the fact that somebody has to pay month to month and becomes accustomed to your bill, that's quite exciting as opposed to one-off sales, right? So I mean, I think there are good reasons why people focus on software, but sometimes you need the hardware platform to bring your solution to bear.
And especially, I think the hardware part, I think I know one of the portfolio companies, and I remember I was in your office in Berkeley Square and I saw this Harvard case study about the leather company. And that's truly a fascinating story of a company that has obviously embedded hardware element to it, but has such a big impact from like, their impact to the CO2 emissions and in general to the production of something that each of us probably have in our cupboard, the sneakers. So
Yes,
that's a
yes.
truly fascinating story actually of that. So the company's called E-Leather, right?
Yeah, so I'll describe it very briefly. You
Yeah.
can take a waste product from a tannery, you break it down the underlying fibers. If you know what you're doing, you build it back up again, and you end up with a lighter but stronger leather. So actually, you end up with an improved product versus the original leather. And that's why some very large companies in the world have adopted that as a superior product than if you would, the original leather. Now that's a materials company, and I think that's another interesting place. I mean, people, for example, are spending a lot of time thinking about packaging, and there are lots of energy ramifications about the type of packaging that you use, et cetera. So it is still part of our world of energy that we're talking about today.
Yeah.
But the things you have to be careful there is obviously different, right? And you have to make sure that the IP is real. You have to believe that you can cost effectively build out these large factories, and that's a lot of different type of risks than creating obviously a software business. So the skill sets that you need to enter into some of these different areas is different in your venture capital team, and I would argue in your management teams. So so if you're going to do investments like that, you just got to make sure you're prepared for a very different type of business model.
Yeah, absolutely. So kind of, we spoke about you guys being, I think, early on in the kind of clean tech space and energy space and e-mobility space. Having now seen so much growth in corporate CVCs, deploying capital, I think it grew to reach almost like 30 to 35%. So one out of three dollars deployed is from corporates, and also generalists start to look in the space because they, as we said, they understand the scale of the sector and impact of it, as well as this kind of ESG ghost looming over other funds that did not look into it specifically because they didn't understand it. How do you think ETF is positioned for, competing with more probably funds that, given that there's just a new fund popping up every day? And what's the kind of USP you offer to entrepreneurs when you work for them? And maybe, what is the core thing that you say you are different from other investors?
Well, that's a great question. I mean, I have great respect for everybody that does what we're doing, and I still think more people are needed, right? So
Mm,
this is no effort to talk about anybody in a negative light. I think in a positive light, what we bring is we've been doing it for a long time, and so you and I were chatting just before we got on this call. This is my third Great Recession
yeah.
that I've been investing in through, right? And so if you have the scars from those other experiences, hopefully you've learned something and you can bring that to bear. I think the other thing that experience brings, it also brings a pretty long Rolodex. So we get a
Mm,
lot of very good, talented entrepreneurs that come through the door who already know us, either know us directly because they work for businesses that we've sponsored, or good friends of friends send to see us saying that this is the established team in the space. The other thing that I think we work hard on is work hard to, being on the phone with you today is a good example of working with local partners that are very good in the regions,
yeah.
because what we can offer is to really help those companies grow not just around Europe but around the world.
Yeah.
If I worked in the Valley, hopefully I know a few people there, right?
Mm,
Also in Asia. So I think that obviously if you've been at it for a while, you've done a good job, you establish a bit of a reputation. Hopefully people want to work with you.
mm,
And then the other thing is to be proactive. I think that we have to get out, we have to follow our beliefs, we have to think about what's coming next. Think about both the mistakes we've made and the successes we've had, and get out there and really try to build the brand, meet the right entrepreneurs,
mm.
find the right business models. And so you just can't wait for people to come to you. You got to go out and do your job, as we used to say. But we do the job because we love it, right? We have a lot of fun, and it's very easy to diligence us because we're a known commodity. You can call any one of my entrepreneurs and ask them whether Rob works
Yeah.
hard on this, whether we've got a good offer.
Yeah. And once you partner with entrepreneurs, how do you usually try to help them to build their companies, and sort of you invest in usually at the time when they're kind of sort of serious, say, so about when they have revenues and they're trying to build out maybe a global business out of, let's say, maybe a more regional one and scale the product. What's the kind of core areas you try to work, maybe yourself personally or as a broader ETF team?
In terms of
If
areas,
you partner with them, maybe you help them with HR, you help them with BD, you
yeah,
have, you mentioned you have like a very wide, obviously, network of people that you can connect in the industry as well.
yeah. I think the most important thing you do through the diligence process of getting to know the management teams is try to understand the business, okay, and
Mm,
understand what their needs are, and to work on problems. Our job is not to slap people on the back and say great job, although that's nice from time to time.
yeah.
Our job is really, if you want to add value, say okay, what do you need? Where can we be helpful? And I think there are different ways you can be helpful. Obviously, for young companies, their number one focus quite often is on where are my customers? How am I going to generate some revenue? And I think a few good introductions, key introductions into potential customers and partners, that can be very, very helpful to a young company. And we've done that many times in the past. Quite often it's in the management teams too, right? So, sometimes we have an excellent founder and they want to add people around them. Who can they add? Who from our Rolodex can we call up and say, hey, this is going to be our next investment. These are really good guys. You might want to
Mm,
take a look at this. So I think that's another place that you can add a lot of value. I think it's frankly a lot of blocking and tackling, and
mm,
trying to figure out what's coming down the pipe and where you can add value. Obviously, in today's environment, this post COVID-19 world we live in, a lot of companies worried about where's the next round of funding coming from, and trying to be helpful around that is very important as well. So, I think that again, you don't really know exactly what people need
yeah.
until you really get under the hood, and then you do your best to solve problems.
Absolutely. And you mentioned, COVID and sort of, so this kind of moves me to my second part of the questions about more just the market and more from like your personal sort of opinion. And you know, I want to start off like obviously this transition is quite a big leap now that is happening in sort of energy industry and especially mobility. And you mentioned cities, right? What are you would say you think personally are the most important three key themes if you had to pick three? That you think will, have a very significant, impact over the next couple of years or 5 years down the road?
Well, it's funny. When you think about that, you may have some very different answers to what you had 3 months ago.
Mm,
And what do I mean by that? Well, you put me on the phone last year. I would have said, hey, everybody's moving towards the city, right?
yeah,
Now I think a few people are trying to move out of the city. But again, I doubt that macro trend has changed just because of COVID-19. But it's
yeah,
fascinating to reflect on, right? Another one is mass transportation, right? Obviously, everybody is now wondering about not just mass transportation, but safe mass transportation, right? Secure mass transportation. What does that look like?
mm,
A sharing economy, right? That's another good example. Obviously that was a big trend and continues to be a big trend, but there are going to be different ways to share the assets so that people feel safe and secure. And I think there are a couple of new trends that come out of this. This work at home trend, the stay at home trend, this not travel trend, obviously will have some significant repercussions on a going forward basis, even as, if when we come back to normal, because I think there will be a new normal. And then the final thing which I observed is some of our companies that have done very well through this crisis have been next generation innovations in supply chain, which is not a topic that people really thought about too much, 6 months ago, right? I mean, sure,
mm.
there was conversations about, but where does your product come from? How easy is it to access it? Is it safe? Is it secure? Et cetera, et cetera. I think these are new questions that are being asked, and that will lead us to another new types of innovation. I'll give you one example of a solution that nobody even thought of, which was nobody really cared about. I was talking to an Asian corporate the other day, and they're looking for a solution that alerts the health and safety team when workers are too close together. Right, there's
Oh
a
wow.
beeper that goes off someplace. Right,
Okay.
so and so is violating X, Y, Z from a safe
Mm,
distance point of view. Right, I mean that's a product we never even really paid attention to. I guarantee you a year ago.
absolutely. Yeah.
So
Yeah, interesting, very interesting observations, and I think something that did you have any specific cases where your portfolio companies had a bit adopted themselves from the product perspective? And I know you mentioned mobility and sharing, and I know you have one company that is doing this sort of share commute, right?
yeah,
And that's a very interesting company in this context, especially in the COVID situation.
so Zelo is the company you're
Yeah,
referencing,
yeah.
and they're active here in the UK and now have been brought into South Africa and Italy. But what they did before COVID was something that was exciting in its own right, which was if you run a major factory someplace, or you're having events someplace, like a big sporting event, you need to bus people in for
Mm,
it to be a sustainable solution, right? You don't want everybody driving around, okay? But there are no bus lines, and so these guys were experts in digital routing software, and they were able to basically pick up your workforce in an efficient manner, put them on luxury buses, and bring them to the big auto factory.
yeah.
And that was a very exciting, fast-growing business that collapsed overnight. And so that's not a really great story. Why are you sharing that? Because obviously the factories had all closed, the sporting events had all ended. So what's this company going to do? Well, actually, all transportation more or less shut down,
Yeah.
and so yet people had to get to the big Amazon warehouses to do the distribution work, or they had to get to NHS hospitals here in the UK. So how are you going to get your employees to work, right, in a safe and secure manner? So they introduced the notion of safe and secure busing, and they did it now for different types of customers. And that service really took off so much so they were generating more revenue from that than they were from the traditional businesses,
Yeah.
right? Within a couple of weeks. And you might be interested by the question. So then, what happens next, right? And we're going
Yeah.
back to this quasi world. Well, here in the UK, we're still not running all the trains and all the tubes we're supposed to. The number of people that can get on them is a lot less today because they're forcing you to stand in line to have the right social distance on the actual tube. And so, what does that mean? That means that more employers are going to have to reach for this type of service,
Mm.
and more of their employees will demand that kind of service. And so, they've had a very strong repositioning their business, so much so that it was better than the old business as
No,
a result
absolutely.
of COVID-19.
Yeah, absolutely. And I think this is very important for like big cities, especially if you get on a tube of London, how can you control that effectively, for example?
That's right.
And these private transportation, other than Uber ride hailing, which can only carry what, two, three people, and again, it's not as efficient because you're not going to the same direction necessarily. So ride hailing could be one answer to a partial problem solution, but something like Zillow is a very, very interesting solution that could be. I think they're gonna have to hire very quickly and scale very quickly to address all the need. uh, it kind of comes back to that similar question. What do you think? Like, we had something unnatural happening twice. So, this COVID situation, and it's a supply and demand shock that happened to subsequently to oil prices that went negative for some short period of time. But just overall, do you think that's a positive or a negative for sort of this energy transition?
Well,
It's
I
a
would
tough
never,
question. There's no yes or
I would
no,
never
I
say,
guess.
I would never say a pandemic is a good thing, but I would say obviously it's focused the mind now that something that was predictable and forecast was ignored until it hit, and the world was largely unprepared for COVID-19. And that's a real disappointment, I think, and a real failure on the part of politicians and society in general. But it does focus the mind now when similarly smart, educated people are saying, well, if you think COVID-19 was bad, just wait for climate change.
Yeah.
And I think a lot of people have woken up to that as being a real danger today. The second thing I would say is that, and this is more of a subtle point, is quite often it's always suggested that people won't change their behaviors, right?
Mm.
They won't, quickly do something if you ask them to do it. I think what's fascinating about COVID-19, certainly the first couple of months of it, people have radically changed their behaviors, and they've listened to governments and they have adopted a new way of living. And so, that also bodes well for the sustainability movement, which is, if people demand change, society, if they believe it's the right course, will react. And I think
Mm.
that's pretty interesting in itself. And then finally, a lot of traditional industries are needing bailouts, like the airline industry, et cetera. And this is a chance and an opportunity for strong-willed governments, regulators, to say, well, if we're going to give you some money, we want to see you pursue a different course of action. I think that the naysayers here, they always point out, well, is there enough money to go around for this kind of stuff?
Yeah.
Will there be now, governments are bust, airlines are bust. Are they really going to go for this? And I think there will be tension there. I think there will be debate there. To some extent, that was the Gilets jaunes movement in France, right, where
Yeah.
the basically hardest hit people, the poor, when they raised the energy taxes, said no, right, and the government has had to back down. So I do think that their economics do play a role in all of this. So I don't think we have to make sure that our companies really make sense economically. We could never rely on anything like subsidies for
Yeah.
what we do, because I don't think those things will be forthcoming. But I do think that there is a desire on the part of many to do something now about things like climate change like never before.
And going to sort of a micro level, do you think that's positive or negative for companies? I mean, obviously, I'm not picking off. It's never a positive, right? Something like a shock of that. But you have spent, as you mentioned, like probably three crises prior, and they're all were very different to comparing one to another. But out of them came like really, really great companies subsequently, and you mentioned some of them. do you think that could happen in a similar fashion in this situation? And there's been this famous, you mentioned Netscape, right? Like Anderson is one of the guys who said, let's build it this time. And do you think there's going to be built great companies for this period of time?
Well, I do fundamentally believe that those that survive the crisis will be benefiting as the economies recover, right? And
Mm,
that's pretty straightforward. The other interesting phenomenon right now, and I don't know how long this lasts, is that the public markets have not been hit as hard as people would suggest. So
yeah.
the currency, either cash or stock price, of a lot of technologies is still very high, right? And so if they wanted to, they could go buy startups. They could
Mm,
invest in startups. They could invest in the ecosystem. So, even though I think a lot of startups today are feeling the challenges of COVID-19, there are good reasons to suggest that if they can get through this, there are opportunities that sit there for them. But I do believe it is a big test of management teams to make the right decisions. And then, this is a common phrase today. First, you need to survive, then you need to thrive, right?
yeah.
But what is the creative ideas that you have once you get through this period to go again in some cases? So that's
It
pretty interesting.
it's actually a very interesting thought that you said. It kind of leads to, I could sense and read between the kind of words that, it could be that the M&A could be quite, active in this space because some of the more traditional companies that were hit it more, let's say if you look at like typical Dow index, it's hit it way more than Nasdaq is, right? Like Nasdaq is always trading at all-time highs. So it seems like the traditional industry is really waking up to the problem is that eventually they will need to, software is going to eat the world. So it's already eating it and it's just accelerating it. So this is a very interesting observation by you, which I kind of didn't thought in that context. So uh,
Yeah, Ruckus, if you go back to my early experience in the early 90s, right, which again,
mm,
before some of your listeners have been born, I'm afraid. But what's interesting there is that the markets never like volatility. So
mm,
anytime you M&A deals and your stock price is bouncing all over the place, so you weren't entirely sure what your next quarter was going to look like, you were reluctant to do M&A deals, right? So I think that currently we're in a situation where there's still the potential for volatility, and there's still a bit of concern as to what the future quarters look like. And so I do believe that the next 6 months may not be the easiest thing, but I'm kind of hoping that bounces back post that.
yeah, no, totally agree. Um, Basically, kind of, I think we're going to our. I'm gonna just check what questions do we have and kind of switch through some of them to you. So there's one. Yeah, so this is a question more relating to what's happening now. So in your opinion, do you think the current developments of the clean tech industry are sustainable, and will we avoid the crash of the sector as it happened with clean tech 1.0? I think this question is kind of one-sided, and I'm sure you're gonna have your take on it. I think it's just
Well,
different this time, right?
it depends, in terms of the severity of the crisis, right? I mean, a lot of people I think can support their companies for this year, right? But what happens if they have to really support the next year as well? And that really comes back to how strong the venture capital teams are that have raised the money. Okay, have they? It's very easy to put money out, but for example, have you reserved properly? The second thing is, can you tell good companies from bad? Frankly, it's not that easy to do, right?
Mm,
I wish I always knew where my winners were. I would never invest in a company that was a loser, right?
yeah.
I mean, nobody bats 1,000, right?
Mm,
And so these are very, very challenging times, I think, for a lot of venture capital teams, some of whom have not had a lot of experience. And if the crisis it goes on for a long period of time, you will see people under tremendous pressure, both internally within their own funds, and then how they project themselves to their fellow co-investors, entrepreneurs, et cetera.
mm. Another question, more related um, to so when investing in startups, which ones do you prefer to look at? The ones that are more focused on software products or the ones that focus more on hardware side? Do you see any huge difference in these areas from investor perspective when working with the teams while developing these products?
Well, I think the reason people like software is pretty simple, right? Which is these are not very difficult businesses to intellectually appreciate or understand. You know,
Mm.
they're using simple metrics, to basically value them. And there's this belief that if you can keep your churn rate low, you've got a stable source of cash flows for the coming years. The other thing I think that why people like them is it's easy to identify who your buyers are, right? So if you invest in certain types of software companies, you can say, hey, I plan to sell this to Microsoft, SAP, they go down the list of companies. I think when you go to other types of businesses, and again, I'm trying not so much pick on the word hardware, but say you're more into a materials world or a packaging space, or different sectors that are emerging as potential places to be, agribusiness, for example, right? It's you have to really understand those places, those spaces, and you have to project out what traditional companies will pay for your businesses, and you haven't seen those types of multiples perhaps in the past that you're hoping for tomorrow. So, what do I mean by that? Well, if you're doing a SaaS software business, not only do you know who the buyers are, but you know what's been happening for the last 20 years in that
Yeah.
space. Right? In some of these new spaces, you're not entirely sure who the buyers will be. You're not sure how they're going to value you, how they're going to pay for you, and there's not a lot of track record, right, to look back to. And so I think that a lot of people quite rightly go for the software businesses because they're easier to understand versus some of these new spaces. But I don't necessarily think that necessarily one should be better or should be done over others. I do believe you can make money outside of software.
Mm. I'm gonna go to a couple of questions that I always ask people that I speak to, and sort of the first one is, if I'm an entrepreneur, looking for capital, and I think ETF seems like a very favorable partner to partner with. How do I engage with you guys? How do I engage with you, Rob, specifically? What's the best way to reach you or your team?
Well, you'll be shocked to know I read and answer all my emails. Oh, man, I'm just kidding around. I think we're very approachable. I think when companies are pre-revenue, it's very hard for us to invest in them, but I still don't mind getting to know people. And obviously,
Mm.
we see, I don't know, over 1,000 companies a year, right? So it's not always the easiest to spend a lot of time with everybody. But I'm very happy when people reach out and they want to tell me a story, and I'm willing to learn, or one of my colleagues is willing to learn.
Yeah.
So our business is all about building relationships and trying to be helpful to people. And if a company is too young, well, then I try to do what I can, maybe a quick email, quick introduction or whatever. And hopefully then, I've done something useful to them. They remember me as they had success and they grow into a position where potentially we could invest. Or maybe it's the VC, right? A VC will say, hey, we'll invest in X, Y, Z. So that's not yet ready for us. Nothing we could do today, but hey, why don't you go meet so and so? They might be able to either invest or they might be, a customer. So
Mm.
our goal is to try to be helpful to people, try to see people, meet people, and give feedback, and then hopefully monitor, the companies as they grow and go.
What's the and the second part of the question is, timing is always very important. When do you like to engage with companies before you take your decision to IC and you decide to invest in a company? Is it usually, it depends. It could be, happening through a month. If you meet the team and it's like fits all your, you just love what they're building and the team and other things. Or is it you need to kind of build out the relationship and you prefer that way, that you know the company early on, maybe not necessarily like pre-revenue, so you can follow them for a longer time. What's your sort of approach to that?
So to be honest, we've done both. We've spent time with the company very, very early on in its growth, and we invested 3 years later, right?
Mm.
It's not because I kept saying yeah, yeah, yeah. I kept saying, okay, you need to do X, Y, and Z. Let me help you get there.
Mm.
Right? And so when it came time to be the appropriate time to invest, they knew us, we knew them. We had done something helpful to them along the journey. There are also times when you have to make up your mind after meeting somebody and spending time with them over a 3-month period, right?
Yeah.
And that company is further along in its development. Quite often that's the case with folks that have bootstrapped their businesses and they've gotten to a certain size and certain success, and then they really want to go for it. And they're thinking, okay, how do I take some growth capital, right? And they don't want to hang around the hoop. You're not going to
Mm.
work for them for 3 years because they're already actually in a position to receive investment. And you make a decision based on spending time with people.
And sort of in the wake of this COVID and the kind of new normal that we kind of travel to conferences and maybe meet people in person, did anything change in terms of your process, how you invest? Are you maybe some people that you don't know, did not met before the COVID, and let's say you cannot travel to like the next, are you still actively looking to invest in the teams that not necessarily you can meet in person, or meeting in
But
person still becomes very important? And it depends from, I think, firm to firm, really. And we're adapting to this new reality in a way as well.
yeah, I think there are a couple of points to make on that, and I'll speak quite openly here. So about a month ago, the height of the COVID crisis, when everything was shut down, I pushed the button. We made an investment in a company called Deep Sea Technologies,
Okay.
and again, you don't have to make an investment, right? But this is a great team, and they're doing interesting things, and I think they're definitely going to not just get through COVID, but do great work during COVID, right? And so it's supply chain software for the maritime industry.
Okay.
And I think that's a pretty cool company, and there's no reason not to invest if that makes sense to you.
Hmm.
Now we also have two more that we're doing due diligence on right now, and you know again, I hope that both continue apace, and I hope that at the end of it, it's a very positive outcome. Now, all three of these teams we've known, okay, pre-COVID, and
Hmm.
we've spent time with them, and so we're entering now into a slightly different period where, well, actually, I don't know what period we're entering into because it seems like Europe is starting to open up again.
Yeah.
It seems like you're going to be able to get around a little bit more easily.
Yeah.
And if that trend continues, hopefully your question will be a moot point.
Irrelevant.
But I do think that if we're going to do stuff over Zoom, then we better make sure we really understand what the heck we're doing.
Yeah, absolutely. And sort of one of the final questions, what do you think you wish for entrepreneurs, just in general, or maybe related to COVID, or what they should take of it? And I think other part of that question, you spent now quite some time in Europe. How do you think Europe is different from US still, and what we could do better to have more success stories?
Rokas, your first question cut out slightly. What kind of? I just need
Yeah,
to.
what would you wish for entrepreneurs in the clean tech sector, and what do you think
Okay.
is what do you think what would you wish to them to do better, to focus more, or I don't know. It's a wide open question, I think.
Yeah, I'm really excited about entrepreneurs in the clean tech sector right now, right? And there's a simple reason is that people are now drawn to this area. I think when we started back in '06 and '07, this was sort of a weird and wacky world. And now you get some really good entrepreneurs that have done it before or have spent time in other types of companies coming to this sector, seeing both the potential to make a difference through the work they do and also make money, right?
Mm,
And so there is no trade-off there. And I think even their teams that are drawn to them, right, are drawn to this. You got to be careful with words like mission-based, right,
mm,
companies, but companies that are looking to make a difference. And I think that's pretty cool, right? I mean, that is something that is definitely new over the last few years. And to the earlier question I was asked, do I think this is another bubble that's about to burst and we're all going to be disheartened by it? Not really, because I think a lot of our industries have moved on. And if you look at the amount of renewables on the grid in Europe today, well, they're not going to be rolled back, right? And there's going to be solutions needed for how you move that energy around. If you look at electric cars, okay, we have a debate on whether it's electric or hydrogen. I get that, but still, obviously there's a lot of charging networks out. There's a lot of large companies that have bet the farm on electric cars these days, and so that is not going to disappear because of COVID, right? So I think some of the momentous changes that we've seen over the last few years aren't going to get rolled back. And again, the need for society to change because of things like climate change is so obvious to all today. So I'm less worried about that. So we've got really good entrepreneurs. I think that we continue to have a big pull through for a lot of the solutions that we're working on investing in today. I think the big difference between us and the U.S. is Europe has its act together, and people might be shocked when I say that because of the challenges of how many we have, 28 countries. I don't
Yeah.
remember right, but compared to the United States, where Republicans and Democrats still debate about whether climate change is real, I think that there's a lot of support here, both political, both from companies, also from
Mm.
companies, also from Joe Blog in the street, right, that are demanding a better world, right, a more sustainable world. And if I were an entrepreneur, I'd rather be building my business here, where there's a lot of hometown support for what one is doing, including capital, which is what groups like ETF bring. And I think it's a big opportunity. I think you also see it in the part of, if you look at some of the corporates, particularly Asian corporates, they're happier looking at and working with Europe today,
Yeah.
because the solutions are great, and frankly, I think we might be slightly easier to deal with.
No, absolutely. No, so this has been a great note. I think I'm excited that you are as much excited about Europe as you are in the Valley, and I think I totally agree with you. And I think there's a good support. This new Green Deal come in, and there's just generally more support than there ever been for energy solutions and mobility solutions. And taking on to your earlier points, this COVID is kind of adding an interesting twist that maybe can even accelerate these transitions. So definitely an interesting time to be living in and being an investor.
Yeah,
Um, so I think we're nearing to the end. I think for everyone who is tuning in or for who is going to be watching this video, definitely if you build an exciting company, get in touch with Rob, one of the more experienced people that I know in this industry. And as always, pleasure to have a chat with you. Hope next time in person. And thanks for your time today as well.
good. I look forward to the next invite to Lithuania, because
Absolutely, it's happening. September is happening, and I think we're opening our walls without quarantine to fly in, even in like next couple of weeks, I think. So I'm overly ambitious and optimistic that
excellent.
this is gonna happen. Thanks
Yes.
a lot, Rob.
All
Thanks
right.
for
Let me see
everything.
you, Lucas. You take care.
Thanks. Bye bye. Have a good day.
Bye.
For everyone else, we're gonna be coming back tomorrow with the fourth Thursday session. So tune in.